want to discuss today wealth planning and wealth management, and we are happy to have with us two guests, Kerry-Ann and Kennedy, who will be speaking to us about this topic. This session will be moderated by Dr. Edward Mungai, the Deputy Vice Chancellor, Planning and Development at Strathmore University, and so he will lead this discussion. Before we begin, just a few housekeeping issues. We have the chat box where we would like you to first introduce yourself. You can tell us your expectations in this session. Those expectations will be useful for our panelists to keep in mind and either speak to them directly or during their presentations. So tell us your expectations. You can also put in comments and the chats and your questions as well in the chat box. So we will have the presentations guided by Dr. Mungai, and then also a question and answer session towards the end in case there are issues that were not covered. So without taking much time, we're already 5 minutes past the meeting time. I want to invite Dr. Mungai to take us through the session.
So good afternoon. It's afternoon, everyone. Thanks, Eric, for introducing us. So as you have been told, my name is Edward Mungai, and I'm the moderator for this session. This session actually is a follow-up of a similar we had something last week on the same topic, and we felt that it was very important to share the same kind of session with the alumni. Of course, when you are dealing with alumni, it's treating a special group of people who have been through our school or university, our college over many years, and of course, if they are friends, they are also welcome. So this is a session on wealth management and planning, and as Eric mentioned, we have two guests who I'm going to introduce briefly. Myself, I'm also a faculty member in the business school, where I teach courses on entrepreneurship and other general management courses. So, of course, this is obviously a very interesting topic to me also.
So first, I want to invite our panelists to introduce themselves. So I will start with Kerry-Ann. Welcome.
Thank you, Eric. Okay, so my name is Kerry-Ann Makatiani. I'm the CEO at Custody and Registrar Services. We're one of the share registrars in Kenya with offices in Nairobi and Uganda. So in terms of, I guess, my participation here, it's coming in from an equity perspective in terms of, there's sometimes questions in terms of the structure of the equity market. I know there's sometimes questions in terms of what is the role of the CDSC versus the registrar versus the brokers or the CDAs. So in terms of the whole understanding of the capital markets and how the various participants in the market, their roles and how they interact, I'm here to address any questions on that, and just also in terms of how do you navigate the capital markets, if there are any questions on that. Thank you, Eric.
Thank you, Kerry-Ann. And then let me also invite Kennedy to introduce himself.
Thank you so much, Eric. Kennedy Ouma is my name. I'm the current reunification officer at Unclaimed Financial Assets Authority, responsible for reviewing reunification process and procedures, facilitating stakeholder engagements with the aim of increasing reunification rate. Currently, I'm also handling the investment arm of the authority, responsible for ensuring that unclaimed funds are invested as per laid down procedures and regulations. It is a pleasure being here and joining with the alumni, being an alumni of Strathmore University College, and I'm happy and looking forward. Thank you very much.
Okay, so thanks our panel for introducing us yourselves, and I think we want to get started. And just to make sure that you are connecting, so this is a session about wealth management and planning. So I want to start by putting a question in the chat about what are the alternative investments that people know about, okay? So that we can see what, and then you just respond. So let's see some activity in the chat. And the good thing we have in Strathmore is that we also have people that are quite, you can call them on the fly, talk about these things. And so I'm looking to the chat to click on from a group here. And some of my friends could actually give a class on all these things. So Dr. Waigura, are you with us here? I can see you. You are the person I can see here, straight on my face. Simon, are you able to unmute yourself?
Hi, yes, I can hear you.
Hi, Dr. Dirita. You can see I'm talking about reaching out to my friends who are here. So as I get some feedback on the chat, I was looking, there's one word that I was looking for, which has still not come up in the chat. When Kenyans hear about investment options, is one word you can tell us, but maybe you can tell us on what other alternatives are there before I go to my panelists. Simon, sorry to surprise you, I know you're up to this.
Wow, yeah, that's a surprise. I was not prepared to think about that. But quick on my mind, of course, we have a number of options that are there. One of it is, of course, is a financial market investment. You could think of unit trust, you could think of money market. Those are quite good investment if you're thinking about putting your money for preservation of your capital, and then also investments whereby you can be able to get your money within a very short time. So sometimes it's people like calling it your emergency fund or investment or saving account, whereby you can easily get your money when you need it, and it was still earning for you some resources. For a long time in Kenya, especially during the Kibaki era, land was a very good investment. You put money on land, you do nothing. Within a few years, it's just doubled or tripled the value. But that's highly unlikely to continue happening. But that's also another option to think of. And particularly if you're thinking about buying land and then you use it for agribusiness. Right now, fruit farming is something big. Just yesterday, I had a talk with one of our former students who has moved from employment and got into full-time agribusiness, and he's doing fruits. And he was telling me that most of the time when you need avocado, most of the fruits or most of the crops, it's the farmer who goes to look for the market. These days, the farmer gives the buyer the phone number and tell you, if you'll be interested, call me and tell me your price, and then I'll see whether your price will make sense. So fruit farming is becoming another interesting areas of agribusiness investment. Yeah, and property was another one in terms of for Lento, but currently the yields are quite low, around 5% or 6% in the country. So it's not advisable to buy property with a mortgage with an intention that is an investment for you to earn your money, because the interest rates will be higher than the yield in terms of rent. For now, those are the ones I can think about. Thank you. Back to you, Edward.
Thank you, Simon. You can see you're up to the task, and, and that's why you deal with friends like this. So thanks a lot for the input. I think you have captured one of the things I was really looking for. And as I give my comments, there's another colleague friend of mine here, David Dora. I'll be coming to you, David, a short one. I know you also can talk about this. But one of the things that my colleague Simon mentioned is about investment in land and property. And of course, there is one word that I'm looking at that people think about, but it hasn't come up when people talk about land. But yes, and also for mentioning one of the big focus today is on the financial markets, which we'll be getting to in a short while. So building up on what my colleague Simon has mentioned, and looking at the changes as has been mentioned in returns from land and property, one of the big areas, of course, that we want to focus on is the financial markets. So we can come to Kerry-Ann, you can give us an overview of the options available, and maybe also tell us what is currently status on the investment in the financial markets? Kerry-Ann.
Thank you, Dr. Mungai. So in terms of the capital markets, I mean, I think sometimes it's before we just talk about what's happening in the markets. I think sometimes it's good just to explain the different players in the market and how we all interact or relate to each other. This is just for understanding of anyone who has invested. If you have a CDSC account or a certificated account, what that means. So we'll start with the regulator, the Capital Markets Authority. I mean, they're the regulator, they provide the oversight of the market, the integrity, the transparency. We have the Nairobi Securities Exchange. So they are the entity, you know, they give us the trading rules, they introduce the products and services. I mean, recently we've seen some more sophisticated products coming in, you know, derivatives trading and some of the short-term borrowing products that are coming in. So that's I mean, the Nairobi Securities Exchange, their role is to look at the market that we have in Kenya and what kind of products would stimulate the interest and activity for persons to invest in the capital markets. We have the CDSC, the Central Depository Settlement Corporation. So they provide the trading platform. So this is a platform on which trades are booked, trades are settled, and trades are exchanged. And those tradings are facilitated by what we call the CDAs or the brokers. So these are, I guess, agents of the CDSC who are able to open CDSC accounts. So they're able to interact with the trading platform, open the CDSC accounts, book the trades, confirm payments, and therefore the settlement can be done. So then we have the registrars. So the registrars are actually agents of the listed companies. So we're actually contracted by the listed companies to manage the register. So we keep the details of the register. We handle any activities that a listed company may want to do with its shareholders will normally be done through their registrar. So things such as communications, any corporate action, which is any kind of special action that a company may be doing, things like paying dividends is the most well-known, but you also have bonus issues, you have rights issues, scrip dividends, where a company may be issuing dividends instead of cash dividends. So they'll be issuing dividends through giving shares at a noted price instead of giving cash dividends. And then of course also AGMs, just managing the AGMs in terms of registration and some of the logistics around AGMs that relate to verifying shareholders who want to attend and the communications to shareholders. So those are the entities and how we all interact. And I mean, one question I know that comes up a lot in terms of people managing their accounts and their capital markets investments and trying to ensure that their accounts are updated is where do they go? So if you have a CDSC account, all updates, whether you're given a bank mandate for receiving your dividends or postal addresses to receive any communications that may be issued by the listed company, that has to be done through your broker because registrars do not have access to CDSC platform. So we receive the data, but we don't have access to input information. And then if there's any other information that you're putting that is not a CDSC account, it will be done by the registrars. But generally you would contact the registrar for any query and we'll be able to direct you where and how you'll do that activity. So as a registrar, we verify transactions on the register. And as I said, with the caveat that trading or activities on a CDSC account that are done through the CDSC platform, those are done through your broker. So with that oversight, where's the capital markets right now? I mean, with the introduction of COVID, I mean, the market took a bit of a decline. Actually, quite some big hits, but we're seeing it start to come back. What people may know generally that there's a lot of foreign investor participation, particularly in Nairobi's stock markets for certain stocks. And I'm not an investment analyst or an advisor, so I'm just giving a general overview. I'm not giving any investing advice here. But what we're seeing now is that, foreign investors are coming back, and we're seeing rebounds in certain stocks. And that means the overall, all shares indices has actually been coming up for Q2. A slight increase, I think around 4%, but when you compare it to a 20% decline in Q1 this year after COVID, that's a good improvement. And I think one of the core tenets of investing in the stock market, actually this COVID situation, I think has shown it, is that there is opportunity for short-term trading, yes, but also generally know that I think stocks, you need to have a long-term view on stocks. So you can do some short-term trading, but generally have a long-term view on stocks, because particular activity may cause some short-term fluctuations in stocks. And that's what happened with COVID. There was a panic, and share prices, people started exiting, share prices went down. So the savvy investors may look at this and say, well, what is my tenet for investing in the stock market? And you look at people have different reasons for investing. So somebody may be looking at the dividend policy of a company. Somebody may be looking at the other fundamentals of a company. How is their stock price in terms of market valuation? Is this a company that they think has strong governance, strong management? Is this a company that they think is making strategic decisions that are aligned to where the market and economy is going? So even if they may not be paying dividends because they're investing in the company, do they agree with the investments that the company are making? So you would invest in those stocks with a long-term view that even though there may be some short-term movement because of what's happening in the economy, as long as the fundamentals of the company are in line with why you're investing, then you stay with it for the long term. And that's why, as I said, with COVID, that impacted everyone, prices went down. But for those investors who realized that this was an economics matter, but the fundamentals of the company and why they're investing in that company remain the same, they stick with it for the long term. And now you're seeing the stock market starting to rebound again. So I think with an oversight, that's what I would say about the stock markets. Know why you're investing, understand the fundamentals of the company that you're investing in. If you're investing to get some dividends, short-term dividends, if you're investing because you agree with the strategy of the company, even though they may not be paying dividends in the short-term future, but you see the payout in the long term because they're making the right strategic moves and investment moves as a company, then those are some of the reasons to discuss in terms of why you're investing. The other thing to note is that it does not have to be a large investment. So for those, there's a survey we had done as CNR, and one of the things we noticed that there are quite a few people, Kenyans, within the category of the age group of like 20 to early 40s who haven't participated in the capital markets, maybe because they're not really comfortable with investing. Investing in the capital markets doesn't require a significant investment. You can start quite low with as I think the minimum is 100 shares. You can purchase 100 shares. So you can start to dip your foot in the water, identify a few stocks that you think are doing well right now. Safaricom is always a popular stock. Banks are doing quite well now in terms of getting a lot of trading activity. And there's some other, if you just monitor what is happening, you'll see the trades that are happening on certain companies. And just start small. You don't have to do large investments, get to understand what's happening. But it is definitely a good market option in terms of your portfolio diversification and having some stocks in your portfolio, your investment portfolio. So with those words, Dr. Mungai, I think I can hand over to you unless there are any specific questions.
Thanks, Kerry-Ann. Thanks for that overview on the institutions available that deal with the capital markets, and the encouragement that you need to start small. You don't have to wait until you have big bucks to get involved in the capital markets. I think that's one of the questions I see on the chat about how we can build a culture of people starting to invest more. And we'll be getting to those questions in a short while. I'll do two things. One, I'll launch the first poll now where people can respond. And as they respond, I want to invite Ken because he comes somewhere else to explain the role of the Unclaimed Financial Assets Authority. And then we'll obviously be taking some of the questions and engaging the discussion further. So Kerry-Ann will be coming back to you. But as I put the poll on the chat, for people to give their feedback on the different investment option, Ken, you could tell us about the role of the Unclaimed Financial Assets Authority in this sector. Welcome, Ken.
Thank you very much, Dr. Mungai. First of all, I will start by a brief overview of the Unclaimed Financial Assets Authority. This is a statutory organization established under the National Treasury pursuant to the Unclaimed Financial Asset Act number 40 of 2011. Our mandate is to, as an authority, is to receive unclaimed financial assets from holders of such assets, safeguard them, keep them safe, and reunite the assets to their rightful owners. We receive payments in respect of unclaimed assets from holders. We also maintain a trust fund and invest these funds for the authority. Then we also make payments out of the trust fund to identify owners of the assets. As of now, to date, we have paid 5,500 claimants with a value of 477 million. That is as at 30th of September 2020. We also undertake examination of records of holders to ensure there is compliance. We are currently undertaking our fourth cycle of audits. We also advise the Cabinet Secretary on pertinent issues regarding unclaimed financial assets. We're in the process of developing a policy for unclaimed financial assets to guide the nation on how to handle unclaimed financial assets. So we have a bit of a lot of engagements in the financial industry, especially on investments. We work a lot with Kerry-Ann and that's custodian registrars and many other registrars. When you look at currently, we have received about 17 billion in terms of cash. And of course, 66% of this is from banks. And then around 15% of this is from listed companies. That is basically dividends and of course shares. The Act, Section 19 of Unclaimed Financial Asset Act, mandates holders to make reasonable efforts to locate owners of assets. And in cases where they are unable to reach out to their owners, the monies are transferred to the authority, where we hold this cash on behalf of government. So we say Unclaimed Financial Asset Authority is the reunifier of last resort. C&R and many holders, registrars, these companies are unable to reach out to their owners. So we are supposed to look for them, go an extra mile and try and trace these people and ensure they get their monies. Unclaimed financial regime, under the unclaimed financial regime, holders are more proactive in looking for owners. Before the act was, or initially before prior 2011, there was no legal framework on unclaimed financial assets in the country. And many institutions were not very proactive in looking for owners to, to reunite these assets to them. But now with the regime, we see a lot of activity, we see a lot of push from the holders, so that before they send these monies to us, they have done their bit to try and locate the owners. And now when these monies are released back to the owners, these owners are able to use this money to buy stocks, especially to buy stocks, to reactivate their, their accounts. We saw a lot of traffic, and I'm sure you saw this in August. There's a bit of campaign on the media by the authority for people to come and claim the assets. We saw a lot of traffic, and I'm sure Kerry-Ann can attest to the number of people they attended to out of this. So when we do this, now we reactivate the investment which were, in quotes, dormant, for people to, to make use of it, to buy shares, to sell their shares, and so help them in their daily lives. So that is basically what the unclaimed financial assets do. We have, so far, we have received 803 units of shares with a market value of around 26 billion. So we see that we are a very big player. In fact, the Act allows us to onboard these shares. We are working on the infrastructure to do it. And once we onboard the shares, we'll be a very big player in the market to influence, the industry. We also have unit trusts reported to us. The Pension Act was amended the RBA, and which allows us to, the pension industry, the players, to remit and claim pension to the authority. So we see a lot of work, a lot of progress going on in the industry, and we play a very key role in trying to activate investments which were silent, or rather, for example, we have a lot of people coming to the authority to find out whether the deceased people had unclaimed shares, and they are normally very surprised to find that there's a lot of money which we are holding for them. So once they go through the succession cost, and the process, and this money is shared with the beneficiary, we see a lot of money pumped into the economy to help people. Yeah, so basically that's what I will say for now. As part of the role we play in the finance, because that is unclaimed financial assets in the finance industry. Thank you.
Thank you very much, Ken, for sharing us the role of the Unclaimed Financial Assets Authority. And in fact, some of the numbers mentioned are quite what people call mind-boggling. You're talking about units up to about 26 billion shillings. You have given back about $500 million shilling, if I got it right. So yes, so you are really holding a lot. So we'll be coming back to you in a short while, and of course we take questions. First, I want to share the results I'm seeing here from the attendees. So it looks like RAD is still, and real estate and properties is still, quite attractive to people. I'm sharing the results now. You can see them there. And of course, the financial markets, I think you're making some headways. So they seem to have the same percentage for the people that voted. So yes, at least not everybody is talking about prot, which is the word I was looking for. People think about prots. We seem to have some trist. Some people think that financial capital market is a good investment. And I think I appreciate the feedback about the 50, 30, and 20 rule in terms of having 50% of your income goes to essentials, 30 to discretionary spending, and 20 for investment. If we adopted this, hopefully we'll be talking about real-time investment. So I'll be back to Kerry-Ann, because when you talk about Unclaimed Financial Assets Authority, of course, they come at the tail end of investment. So maybe I want to ask, and how come these people invest and finally we lose track, and all this investment then go to Unclaimed Financial Assets Authority? Or even more positively, what could someone do to avoid a situation where their investments end up with an Unclaimed Financial Assets Authority. Kerry-Ann.
Thank you, Dr. Mungai, for that. Yeah, that's a very good question. And I think it's a combination of quite a few reasons. One of the things, I would say to start at is to realize that the UFA, or the Act, the Unclaimed Financial Assets Act, has certain criteria by which an asset is deemed to be dormant. And I think if I can speak to the capital markets, maybe not so much for the other assets, but at least if we look at, for example, the capital markets and why is it that those number of shares and dividends are going. So if you look at one of the main criteria, or two of the main criteria are correspondence or activity on your asset as a main criteria. So if we look, for example, for shareholders who are actively trading, they wouldn't be dormant, and we get trading activity, and that's one of the basis on which we say this shareholder is active, even if we haven't seen them at an AGM, because not all shareholders attend AGM. So we look at trading activity. But what happens if you're a certificated account holder? So for example, you're holding this with a long-term view, you're not really interested in trading, and so you're not participating through trading. So the next criteria that it really becomes important is your dividends. So if you have an account where your details are outdated, so you're not receiving your dividends and you're not receiving the correspondence that registrars are sending to shareholders on their assets, especially around this UFAA reporting period, then it's likely that that asset is still going to remain uncashed. The dividend is likely going to remain uncashed, or you're not going to respond to the message, the circular, the communication, and so you'll be deemed dormant. So if your asset doesn't have any activity on it for dividends within 3 years, at the end of that 3-year period, you have to be reported as having a dormant activity. So the two main reasons, if you're not trading, then you want to ensure that you're cashing your dividends. So then you need to look at what are the options that you're using to cash your dividends. So we mentioned that shareholders don't have to have significant amounts of money to invest. So if you're a smaller retail shareholder, your dividend may be a smaller amount, maybe 1,000 shillings, 1,200, even under 1,000. So waiting to receive that through the post office is not the most efficient. So you want to do things like sign up for M-Pesa. So you need to look at the method that you're using, you have on your account to receive your dividend, and really try to make sure that it is the most efficient method. So use options like M-Pesa, opt in for M-Pesa. Getting a direct bank-to-bank transfer is always better as well. So if you're receiving dividends maybe a bit higher, 5,000, and or maybe you may want to just get a direct bank-to-bank transfer. And definitely, if you're a significant shareholder, your bank details need to be on the account, because RTGS payments over $1 million can only be done by bank-to-bank. So then why do we have shareholders who have dividends over $1 million shillings going to the UFAA? Because we do have that. And if you look at those may be estates. So that brings in the whole cultural aspect now. So I've just addressed the whole issue of making sure your details are up to date and making sure that you have an efficient dividend mode on your account. So we recommend M-Pesa or a bank-to-bank transfer. That way you can be sure your dividend is going to be cashed and your asset will not be deemed dormant. So for the larger ones that have been reported to UFA, those tend to be, I will call them estates. So deceased estates where the beneficiaries are not aware that the deceased had this asset. So they're not able to claim it. So that whole brings in the whole issue of succession planning and really having a succession plan, a will. These are things that sometimes we don't like to speak to, but we are not going to live forever. I mean, technology is definitely improving long-term or longevity, but things like a will, which culturally a lot of people don't like to address. But those are the reasons actually why a lot of those larger dividends and assets are going to the UFAA, because the beneficiaries are not able to claim them. So in fact, it is not helping the beneficiary because it's going to the authority. So in a nutshell, I would say those would be the main things, and also keeping a track of your assets, knowing what you have invested in, and just keeping a track of your asset, just as you would know which land you have, know which assets you have, know which shares you have, and manage your accounts. So in a summary, those are some of the things. Know that as a registrar, before we deem your asset to be dormant, we look at very many things. So we look at, have you communicated with us on any activity? Have you attended an AGM? Have you replaced a dividend check? Have you cashed your dividend check? Have you traded? And if you've done any of those activities within the 3-year period, then your asset is not dormant. So that's the summary. Main thing, receive your dividends, have an efficient payment mode, and make sure your account details, your mailing details are up to date. Something as simple as your postal code. This was something that was introduced a few years ago, but people haven't updated their postal codes. That causes a lot of mail to go undelivered, and actually some of it comes back to our offices. So this is not efficient for either the company that's trying to communicate with their shareholder, or the shareholder who is not now receiving the dividend just because they haven't updated their postal code. So that would be the summary of managing your shares and your dividends to ensure that it doesn't go to the Unclaimed Financial Assets Authority as a dormant asset. Thank you, Dr. Mungai. Unless there's any other question.
There is a question, Kerry-Ann, on the chat box from Simon. Or maybe this could be taken also by Kennedy. How can UFA make the claim process simplified? E.g., if I have less than 5,000 shillings through the website, it seems, why do I need all the expensive paperwork that might even be more expensive? That's accounting for opportunity costs of time to go to lawyers. So maybe Kennedy or Kerry-Ann, any one of you can take that question. How can this process be simplified?
Thank you very much, Eric. We have gotten a lot of feedback from our claimants and also potential claimants on our processes, and we are alive to the fact that we need to simplify our process. I think rather the challenge we have is our claim process is majorly derived from the regulations, Unclaimed Financial Assets Regulations 2016. And so the regulations stipulate the documents which needs to be filled, the issues of going to the lawyer and doing all that paperwork. Yeah, and we are in the process of reviewing the regulations, especially for small amounts, so that we remove some of the the requirements. From around a month or two ago, we launched online claim. As we wait for the regulations to be done, we're saying within ourselves, what can we do to facilitate unification? So we are doing online, which is a very big step. I think when we started paying in 2016, we didn't envisage that this would come to pass, but we are currently accepting. You can do everything online without visiting the authority. Thank you.
Okay, thank you, Kennedy. There's a question here connected to what Kerry-Ann, you said about you don't need a lot of money, large funds to invest. So the question here from David is, how can you encourage the culture of investments via capital markets instruments from early in one's active productive life. Imagine a university student and a young alumni who just graduated and are beginning to work. How can we create this culture? How can we demystify the investing in capital markets instruments?
Okay, thank you for that, Eric. I know that there's some activities that the NSC is doing, working with universities and trading clubs within the universities and holding certain virtual trading competitions where you're using virtual money to, but I think perhaps, for a lot of younger people or maybe just starting off looking at what are you going to invest in. I mean, land has always been a cultural, has always been at the heart of Kenyans. So land is always there. But for those who may not yet be in a position to invest in lands, then they start looking at other options. And unfortunately, for a lot of younger people, the interest is definitely the short-term results. And that's why we've even seen the betting market has gone so much, because people are looking for short-term, quick results. I would say for investment, if you're looking at short-term, you're going to look at a company that's paying good dividends as maybe your first entrance into the stock market. So that's information you can get in terms of how often companies pay, and companies normally have a very defined dividend payment policy. You will know whether they're paying 2 payments in a year, sometimes even an extra special payment, but at the very minimum 1 payment and 2 payments. You'll be able to get that from their past activity, and companies tend to be very consistent with how they pay dividends, because that's one of the factors that shareholders or investors look at. So if you're looking for more of a short-term game, look at some of the stocks that have very good dividend payout policies. If you have a bit more of a long-term view, and you're able to put some money in for a longer-term view, look at more of the governance and what those companies are doing, what industries are, how are they, what's their strategy. So you want to look at their strategy and know that perhaps their dividend payout policy now is a bit smaller because they're doing heavy investments based on their strategy, but the dividend payout will come later. Now, the other thing is that companies also do bonus issues. So those are some of the ways when a company has quite a lot of retained earnings, that it may give back some of those retained earnings to shareholders when their strategy has come to fruition and they're now getting the returns from their strategic investments. The retained earnings go up. So one of the ways that they may give this out, rather than a significant cash payout, which some of them do, a special payment, they may give a bonus issue. So you're earning more shares based on the shares that you have. So it's something that we just need to look at and know that there are ways of investing in the capital markets that can meet whatever the need is that you have at the time. So whether you're looking for a short-term return, look at companies with good dividend payouts. If you're investing for maybe your future, your children's future, and I mean, we see quite a lot of second generations getting good investments because of how their parents invested and now how those investments have done over 20, 30 years. And they're now getting the rewards of their parents' investments. So if you're investing for the long term, maybe your children, you want to look more at the strategy of the company that you're investing in. But there are definitely ways of investing in the capital market to meet whatever your investment need is. As I said, one of your portfolios. It's always good to have a diversified portfolio. I think in the previous panel, somebody talked about land, and we've seen this where we have a lot of land wealthy persons, but when something comes up that they require cash immediately, land is not something that you can, it's not cash solvent, it's not something that you can easily liquidate into cash. So you want to have a portfolio that has your land, because that's always going to be there, but you also want to look at liquidation assets that you have in your portfolio investment. And so you have a diversified portfolio, and definitely capital markets can be one of those assets. Thank you, Eric. I hope that addresses the question.
Yes, it does. Dr. Mungai is back. He'll then continue with the next question. Thank you, Kerry-Ann.
Yeah, thanks, Eric. And I want just to build up on both what Kerry-Ann is saying and we have from Ken, because I was checking, maybe some of the members of the alumni here are aware, but there was our university, the Strathmore University Foundation has a project now to help, I would say to help. So the process, as Ken has mentioned, seems to be a bit of a barrier. But working the Strathmore University Foundation, we are trying to work with both staff, alumni, and I would say even other Kenyans to see how we can help them get their assets reunited. Okay, so I'll put an email there on the link on the chat for those who may be interested to participate in this project. And we have it for two reasons. First of all, from a university standpoint, one of our pillars is service society. So when Ken talks about the money they hold, we figured out that there are some people, including parents, that have assets there and they have problem paying fees. You know, this is a dilemma we see. And of course, working with them, we can then see how to unlock that money and then they can pay fees. And additionally, of course, the foundation has an initiative, which is to raise funds for students that are affected by COVID and therefore not able to pay fees. So we are hoping that some of the people at least could donate some of the money if they so wish to the foundation. So in a short while, I'll put the link there for people that may want to contact the Strathmore University Foundation for that. So I am seeing some questions here, and one of the questions that was put was about Kerry-Ann was touching on it about this thing of investment, but I want to see whether we can respond. Somebody saying about taking credit to invest in financial assets. I don't know. Somebody responded to, but it's an important question. And Nixon Kibuchi, you're one or in the platform here. We just want to clarify the response you get, which I think is important for people to understand. Nixon?
Thank you, Dr. Mungai. Probably not really an expert opinion, but really the question that was asked was if it would be wise or maybe advisable to take a credit facility, then invest in the capital markets. But one of the, you would say, just an overview or a high reaction would be to first check what would be the cost of the credit facility in terms of maybe what would be if it's a loan, what would be the interest rate payable on the loan, and then do a comparative against what are you reaping from the investment, then compare the two. If it makes sense to invest so that maybe the reward is higher than the cost of the facility, it would be good to go ahead. Then looking at other factors also. But if it wouldn't be a good consideration to make, it wouldn't be maybe advisable to go for it, because in a way you would be losing by investing because you'd be paying a higher premium on the credit facility and you'd be reaping lesser on the investments you've made. Thank you.
Thank you. Thank you very much. Yes, that's a good insight. Of course, we have to work these numbers to make sure that what you're investing in gives more benefit. I want to go back to Ken. So we have heard quite a bit about like investment coming to you from shares and maybe bank deposits. I just want to know whether there are other types of investments that come to Unclaimed financial assets and what that would be and how to claim them.
Okay, so we have various classes of assets as per the Act, Unclaimed Financial Assets 2011. So we have, of course, insurance. We have ownership interest, that is shares and dividends. We also have checks. We also have dormant accounts, dormant, so it's classified as demand, savings, or mature term deposits. Deposit for utility services is another category. And then, though this one you've not received, because this is majorly for government, then the other one is determination or order by court or refund by holder. Court, there's an order by court that Bank X refunds a customer, and then this is not done. After 2 years, it comes to UFA. Assets from devolved business entities. We also have gift certificates and credit memos, unpaid wages, assets held in safe deposit boxes. I think this was in the news. You saw this thing of gold there, and CBK is really it's really keen on this class of assets to avoid issues of money laundering. And then the last one is assets held by court or government department. So that's basically the classes of assets we have. How to claim these assets? We have four broad categories of claiming money from the authority. So one is, the one category is a claimant is alive. The other category, a claimant is deceased. The other category is a business entity. Then the other category is claiming on behalf of someone who is alive. For example, say Eric's brother is in the US. He left money in Barclays Bank, so he can authorize Eric to come and claim on his behalf. So that is the way, the broad categories. And there are 3 forms which are filled, which are available on our website, which we expect the claimants to fill. And after filling these forms, and then 2 of them have to be witnessed by a commission of votes. Then we need to know you. So we need a copy of your ID, KRA PIN, and then we also need details of where the money will be sent. And we also normally have some collaboration between ourselves and the institution which was holding the money. There's some documentation we require from them to give you, which you now attach to the rest of the documents to claim the money from us. And as I mentioned earlier, from 3-4 months ago, we launched online claims. So you fill the forms, then once they've been certified and you have all the documents, attach them on our website, we'll process and pay you without coming to the authority. So that is broadly the requirements for claiming. Of course, for deceased cases, we need the succession documents and the death certificate. And then for business entity, we need some documentation showing that the person claiming is the owner of the business. And then for the one I give an example of claiming on behalf of someone who is alive, we need a registered power of attorney, which is done by a lawyer and registered administrator of lands. Yes. Thank you, Dr.
Okay, thank you very much. So you get quite a bit, and I think we appreciate you have taken time to explain to us those various categories and how they come to you. And of course, that now people can even check online and go through the process of claiming, even claiming for someone who is not even here.
Dr. Mugai wanted to ask the panelists to make some final comments as we are coming towards the end of this session. So maybe we could start with you, Kerry-Ann. Just some final comments to the people in the room about investing in the capital markets and the stocks. Thank you.
Okay. Thank you so much, Eric, and thank you, I'm sure, Dr. Mungai, when he comes back online or if he views the videotape for having me again. So I guess my final words would be in terms of wealth management and the role that capital markets played. it can be part of your diversified portfolio. So your diversified portfolio should be looking at various investing needs. So you want to be looking at, in addition to our well-loved plots and land assets, you want to be looking at assets that also have some liquidity. You want to be also looking at whether you want the assets that will give you maybe some short-term cash rewards, but also having some assets where you're keeping a longer-term view, knowing that it will pay back in decades, but those are the ones that you're not going to really play around with unless something fundamental has happened with the company that you no longer agree with the strategy or the course of action or their governance. So a diversified portfolio, of which capital markets assets can be one of them. The second thing is in terms of relating to UFAA, managing your investment. So knowing what you have, monitoring it, keeping your records up to date so that communications can get to you, so you are aware of any activity. And even if there's you know, a bonus issue or a rights issue that gives you the opportunity to improve your assets at a discounted price as a shareholder, you want to receive those communications. We're in a technology society, so a lot of our assets management involves technology use. So use that mobile money, banking money, put your email, you know, ensure we have emails, ensure we have telephone numbers, because registrars do use emails and SMSs to communicate. So I think that would be it in summary. Capital markets, we can be one of your diversified portfolios. Please manage your investments to ensure that they don't end up at the UFAA. And third, take a hard look at some of those cultural norms, managing wills, because it really makes administration of assets very much easier in terms of transferring assets and identifying the beneficiaries and just generally preventing fraud on assets. Thank you, Eric.
Thank you, Kerry-Ann. We'll go to Kennedy.
I will just say, first of all, thank you very much for this opportunity. I think majority of us are hearing about UFAA in detail for the first time. And if this happens for people, you know, intellectuals like us, so you can only imagine in the rural areas, the level of awareness is quite low. So we normally, you know, don't take these opportunities for granted, and we are happy for the opportunity to even, you know, create awareness about the authority. And two, there are two ways you can check whether we have your unclaimed assets or unclaimed assets for, you know, you can check for your relatives or your friends. The first option is to use USSD code *361#. *361#. I'll post it to the chat. So once you go in there, just register and then check that we have your unclaimed assets. So this only happens on the Safaricom line. We very soon will be going to the other networks, mobile networks. *361#, register. Once you register with your ID, then you can check for yourself or you can check for anyone else. Then the other one of how to check is through the website. On the website as well, there's on the top right corner, you'll see register, log in there, sign up, and then you can check. And once you can check for yourself, and you can check for your relatives, your friends as well. And then the other thing is if you, for example, if you want to lodge a claim, it's possible to lodge a claim on behalf of someone online. For example, your parents have country, they bought EABL shares, you know, they are old. Once they give you all the documentation and you know you have the paperwork, you can do it for them online and track for them. Thank you very much, and looking forward to more interactions.
Thank you very much, Kennedy. I will be asking Dr. Mungai to say some final words as we end the session.
Thank you. Thank you, Rick, and thank you very much, Kerry-Ann. Thank you very much, Kennedy, for sharing the insights, and of course for Alumni for attending. I think this shows what the university is trying to do in terms of helping, I would say helping, create awareness of different things that exist in our country. And of course, like Ken has said, one of the things that we figured out that we could really help was creating awareness about Unclaimed Financial Assets Authority. Of course, creating awareness about the investment in financial and capital markets, which we have done. So we want to encourage alumni who are participating in today's session, not only to take advantage of this knowledge, but also to spread the message to other people. I think this is very important coming from this particular group. And as Eric has mentioned and sharing in the chat, is what the university is trying to do to help those people that may have assets claim them. So I think one of the things that is that if you want to be contacted by the Strathmore University Foundation, feel free to put your email on the chat and we can contact you and work together. I think we are trying to all come through out of this COVID situation, and anything that we can do to help each other is a good step in the right direction. So I want to thank you as I go back to Eric, thank my panelists, I thank other colleagues that have got on the platform to give a word or two. And we look forward that when we do have another event, then of course we'll participate. So back to you, Eric, to close.
Thank you very much, Dr. Mungai, for those words and telling us what the university is doing as regards helping students. We will share the recording of this session. Otherwise, I want to thank you for taking time to be with us for the last 1 hour, 15 minutes. Do have a good afternoon. Stay safe and let us continue working together.